position in the market? I mean, it pays no interest, no use, no fundamental value. What would you say to that?
Of course it has fundamental value. It's $1,200 an ounce of fundamental value. The thing about gold is lots of things. I mean, you say it pays no interest, it has no use. Well, it has a monetary use, it has a reserve use, it has a jewellery use, it has an electronics use, it has lots of uses. If it didn't have any of those uses, then it wouldn't be $1,200 an ounce. You say it doesn't pay any interest. Well, actually it does. You can lend your gold out in exactly the same way that you lend your dollars out. You could say, you know, a dollar bill kept under the mattress, that doesn't pay any interest either. But gold, if you want it to pay a yield, then it can pay a yield in the form, as I say, you can lend it out and you can get the lease rate on it. So it does have all of those uses, and probably the greatest use it has is it is found everywhere in the world, and everywhere it is rare, and all rare things always carry a high value. There is a very, very technical relationship analysis you can do between gold and dollars that will demonstrate that even if there were no dollars in existence, gold would still have a value. So that implies that it does have an intrinsic value. Not only that, but the intrinsic value is actually unrelated to the number of dollars in circulation. And of course there are dollars in circulation, and that has an effect on the price of gold, because the price of gold effectively demonstrates a relationship between the availability of gold and the availability of dollars at the same time. So it has all of those things, and it's rare.
It's funny because there's a huge amount more dollars in the world with QE and you know, what's going on. I mean, gold prices hasn't changed that much. Do you think that industrial demand is going to increase or decrease over the coming years and change the value?
Industrial demand tends to go up slightly year after year, mostly because the global economy tends to grow, and that means there is greater consumption of material goods. Also because there are more, as is the case with almost every metal and mineral, you find more applications for those metals and minerals too. So you would expect you would expect the use of gold industrially to increase as well. However, to say that gold has not gone up that much, what gold has done is it has discounted in advance that quantitative easing. I remember gold in 2001 as $250 an ounce, so it is almost 5 times higher than it was. Now, actually, the US monetary base has increased by about 5 times, from about 800 billion to 4 trillion in the last, it's the last 7 years it's done that. So gold started its run earlier, but actually the gold price has gone up quite a lot, and certainly if you compare it to inflation, it's vastly outperformed inflation over the last 14 years. So if you like, it's more than discounted inflation, and it has probably less than discounted the growth in the money supply, that is true, but it has quite largely discounted it. If you look at the money supply and you say, where should the gold price be? If you do a correlation since something like 1958, you would expect the gold price to be nearer $1,800 an ounce than $1,200 an ounce.
With that in mind, if you think about it, like all the gold that's ever been produced has always been hoarded. It's not been thrown away. There's nowhere to throw. It's kept, and yet we're still mining it. Isn't that going to ultimately push the cost of gold down?
No, because in the same way the amount of gold in the world is increasing, it is very small, the amount of gold in the world anyway. So it is about 165,000 tons. If you work that, that's something like 6 billion ounces. It's roughly 1 ounce per person in the world. So I don't think you'd describe that as a lot of gold. You know, it's one relatively small coin per person in the world. In addition to that, of course, although the amount of gold increases by 3% a year, the number of dollars in circulation typically increase by more than 3% a year. Over the last, since the end of the gold standard in 1971 under Nixon, the money supply increases by about 6% a year. So you have gold increasing by about 3% a year, dollars increasing by 6% a year. Actually, on that basis, you would probably expect the gold price to rise rather than fall, in dollar terms, obviously.
Any books that you'd recommend about gold?
I suppose the one that I think of, because I love the history of it, is by Bernstein, and it's called The Power of Gold. There are interesting books on the value of money looked at from a philosophical perspective, which investors could also look to. But I would probably start with the Bernstein book, The Power of Gold.